Hey there, good morning. It's Trisha with Easy E-mini Trade, and I'm just going to do a short video on getting into a moving market. Since yesterday, if you traded NQ, you saw it shoot up right off the open and then straight down in the afternoon. So how do you get into something that is already moving strongly and you're not in it? So let me just give you a couple ideas. Okay, so this is NQ on a 1 minute. If you're trading off a range chart, you can look for pullbacks to areas of support. For example, if the market is moving higher. So here's NQ yesterday morning. You could see it moving higher, higher, higher. And then you're trying to find a way in. So you can use a 5-minute chart, a tick chart, whatever you like. If you're using a range chart, you're not going to get topping tails or bottoming tails like this. So you just have to pick reference areas. So this is a 1 minute chart that you're looking at. So NQ moves higher off the open, excuse me, and then you get this little pullback here. You can see it establishes this little area of support here around 1350. This bar here holds, this bar here holds, and then you get this little bullish candle where you have a bottoming tail with the majority of the bar pushed up toward the upper third. So you could enter in a tick or two above that candle. Now, if you want to wait and let it consolidate, you can do the same thing, but that would be more or less like a breakout opportunity. So here you can see it consolidates. At this point, I'd be a little bit leery of a breakout because of how much it has already moved. And the same with this little pullback here. It's moved a far amount from where it opened, and not really much of a pullback when you look at the relationship to, like I said, how far it has moved. So I'd be more inclined to let it try to consolidate and then look for an entry or a little bit bigger pullback. So you get consolidation here, a move higher. If you attempted a breakout above this area here at 24.25, it worked. Generally, if you don't have a strong trend or a lot of momentum, you're going to find that most of the NQ, YM, ES will give you a new high of the day, and that's what you see here in this little dash line area, and then it will pull right back. So just something to consider. But if it's a strong trend, then you just take your chances and take the entry and assume it's going to be able to get through that high of the day, but just get prepared at that high of the day in the event that it does pull back. So you get your consolidation, little breakout here, then it pulls back. You can see the 3-4 red bars here, and you can see it closes right on the resistance area here at this 25.25 area on this green bar. So you can get in above this green bar right here, or wait for a close above this resistance area and jump in there. And then you're looking at the high of the day, which you could see is right here in this dash. And then you're looking for a possible reaction there. So you get a new high, and then it pulls right back. So I would be looking for another bullish candle. Don't really get one here that I would like, but realistically you could still be in from your trade back here, depending on how you managed it. So I would be looking here. Pops again right here. You get your little consolidation, pull back here, green bar, bottoming tail. You can get in there, and then I would be looking at this area here at 46 where it was holding resistance as a possible area where we might get a reaction. You can see it does react there, consolidates here. So either you're trailing and you're still in when it breaks out above there, or you could take a breakout above that area. And if you're using order flow, you would just be watching for a flush of those buyers coming in on those breakout types of trades. And same here, you get your little consolidation. So as long as you've got the momentum, you can take the breakouts of those little consolidations, but you do have to obviously be aware that at some point this is going to, probably roll over. But in the meantime, you might as well capitalize on it. And I'm not going to say that I could do this because I don't have the patience, to be honest. Like if I got in this, you could use the super trend stop to trail under it. And I say I don't have the patience, but the thing is like if you're using the super trend stop, in most instances, it's not going to move like this on most days, right? We know we might get a pop in one direction and then it rolls over. So, you just have to be willing that if it does pull back, let's say, and you're in and you want to trail it. And so let's say you get an opportunity to get out up here at 57.50 as it's holding resistance, as opposed to where your super trend stop would be down here about 10 points away. So that's like the way I look at it for me, and it's just for me, is that I wouldn't want to give back the 10 points on a pullback. So I don't know, you just have to figure out how you want to manage it and what's best for you. So once again, you get, these are old here, so let me just get rid of this. So once again, you get your pop here, and admittedly, it's a little bit questionable, taking a break out at the high of the day, but as long as you've got the momentum, you can give it a shot, and, if it doesn't work, then you can use a tight stop. So you get your pop here again, a little consolidation here sideways, pulls back to the support area that's holding right here. You get this pullback, bottoming tail, even though it's a red candle. You can buy above this bar here, and at this point it's either going to roll over or attempt back up to the high of the day, right? So you just have to have a little patience there. And so you can continue doing that all the way up as you're getting the bars, or you stay in the trade and you just trail it. Here we get a bigger pullback, right? It's a little bit deeper, and generally I try not to do anything in the round number area because I just tend to get burned whenever I do. But down here you can see we get this pullback. This creates resistance up here around this 88. And so entering in, you see it pulls back to support here around this 88.75. Red bar, then you get your green bar here, and you can enter in above this green bar here. So for me, I'd be looking around this 97 area above, or 8,000 for a reaction, just because of how NQ typically acts in the round number area. And then I have to just get out of there before I would do anything. So that's where the exit would be for me, and then I don't have any interest in re-entering around that round number. And then also that green line you see there is a previous day's high. I wasn't trading in the afternoon, so I don't know, what happened to cause the market to drop so much so fast. So I'm assuming it must have been some kind of news. But once it stops basically giving you new highs, then you're going to stop trying to take pullbacks, right? So that's just something to consider. So as you see here, you get, a new high here, but then here it fails to even hit that high. So then I wouldn't be too quick to jump into a pullback for a buy anymore. This is giving you a heads up for a possible, consolidation or direction change. So if you're looking at it, you can still take trades. You go back to your regular setups that you trade on a day that you don't have a strong trend. Then on this down move, not much you could do about, a quick drop here, unless you have a setup and you're willing to take a short. And after consolidating sideways for so long, maybe you were willing to give it a shot, but you'd be looking for the same thing, pull back, and then you'd be looking for, let me just get rid of some of these lines here. Then you'd be looking for a bearish candle to go short under. So you just do the process all over again, right? So here, this is a round number spot, but you get this topping tail here on this green bar. It's a green bar, a round number spot, so I'd have to stay away from there. But this one here looks pretty good right here under this red candle. I'll just put a line on it so you can see. So a short there, a retracement, and then a short here. And then you have to wait for the retracement, and then right here. So you're just looking for a way to get in on the retracements, because if it's going lower, you're not just going to jump in short, because I'm not saying you can't, but you obviously don't ever know when the end of the trend is over. So just hope that you find that helpful. Then you get this retracement here. It might be a little hard to see this yellow line, but that's the previous day's close. So moves lower to the new low of the day here, retraces, then you can see it retraces to that close from the previous day, and you can get in under this red candle here, and then you're back to this next round number area, and then you look for the same thing, meaning you wind up with a bigger retracement here, and you could still, even on this retracement, get in under these candles right here if you were so inclined. But when this fails to trade back down and give you a lower low, then that's a heads up that you're likely going to get a bigger retracement. And even here, this is like a little bit of a heads up as well, because this is a pretty big retracement, and it takes out this area here and this area here. So if this were going to continue lower, you wouldn't likely see it take out all those areas. I'm not saying it couldn't eventually go lower, but that's going to be a heads up for likely consolidation or a bigger retracement. Okay, you guys, I hope you find that helpful. And if you have any questions, as always, feel free to shoot me an email. Have a fantastic weekend.